RIN TV coverage of the 2015 Joint Industry Forum is brought to you by PCS, a unit of Verisk Analytics. We caught up with Bob Hartwig, president of the Insurance Information Institute, between sessions at the III's Joint Industry Forum here in New York. He shared his thoughts on the new Congress, the debate over capital standards, technology, and more. Here are the highlights.
You know, it's a new Congress. It's a relatively conservative Congress, and it's a bit of a wild card. I don't think there are a large number of major insurance issues facing the industry. What we do see is a few carryover items from Dodd-Frank implementation are still out there. We've heard recently, and although this is not a legislative issue, we've heard about MetLife is challenging its designation as a systemically important financial institution. That's going to be one of the major issues. That's going to be played out in the courts rather than in Congress. And basically, they're going to be challenging whether or not these criteria that are used to determine systemic riskiness are in fact, are they appropriate or are they arbitrary? Where do they come from? And how do you get yourself out of this Hotel California that they call a SIFI here in the United States? I think that you will see Republicans in Congress vote on a number of occasions to try to change the Affordable Care Act in a variety of ways. I mean, they know that they can't repeal it. President Obama still has the veto pen, and they probably do not have enough votes to go that far. And it's not clear even if there would be public sentiment to completely repeal every provision that exists in Obamacare. Now, we'll have to see. Are there going to be some negotiations as we move along over the next 2 years where the president is willing to go along in exchange for something else, perhaps something else completely unrelated? We'll simply have to see. But I think Obamacare remains the law of the land really for the next 2 years, so long as President Obama is in office. Capital standards. Well, there's increased view that, again, in the United States, the Federal Reserve remains very, very interested in kind of common sort of capital standards, even looking at capital standards that are perhaps being considered abroad. Will these slowly but surely make their way into the United States? And so I don't think 2015 is really going to be the year where we see these things shift a lot. But there's going to be a lot of discussion about capital standards, uniform capital standards, and whether or not regulation, more along the lines of what we see in Europe, is going to have any place here in the United States. Technology is a disruptive force in many industries, and insurance is no difference. It can be disruptive in ways that seem to be destructive. It can be disruptive in ways that can seem to be beneficial. I mean, more data is good from an insurance industry's perspective. You can better assess risk. You can more accurately price risk. You might be able to provide insurance to more risks, and you can make more efficient use of your capital. At the same time, the very same technology that makes all of this available is also creating new opportunities for other entities. We've heard just recently that Google is going to enter the marketplace with basically an online insurance exchange selling auto insurance. It's not going to be an insurer, but it's going to be one of these online points of sale for auto insurance. And so is that disruptive? I'm not so sure that it is. I mean, Google actually might just be another name out there. But more technology, that's the way it's going. And there's technology not just affecting the industry, but it's affecting who we insure. We heard a lot on some of these panels already about technology reducing the number of accidents, that in effect the world's becoming safer. Whether we're talking about vehicles or whether we're talking about the workplace, the world is becoming a safer place, and technology helps enable that too. VJ Dowling happened to mention in his comments that he thought that the homeowners insurance industry would eventually be larger than the auto insurance industry. Now today, the auto insurance business is about 38% of premiums written. Homeowners is about 12 or 13, so it's only about the third the size. But what VJ is saying is that there are going to be so many fewer accidents in the future, and potentially they'll be less severe, and that might mean less litigation as well, that ultimately homeowners insurance will overtake auto insurance in terms of size. But we're talking about not 2015 or 2016, we're talking the span of a couple of decades. Well, I think that in the United States we've got an expanding economy. You don't hear a lot of talk about that, but it's the most robust economy we've had in a period of time. I think that it looks pretty good in terms of workers' compensation. We've got relatively rapidly growing payroll exposures here. We're adding about 250,000 jobs a month. We're starting to get a little increase on the wage side, so that compounds that growth rate. So workers' comp's looking pretty good from a growth perspective. I know there's a lot of focus out there on areas like cyber, but they're very, very tiny relative to something like a comp. Now, Right here in the here and now, while we've got very strong and robust new auto sales, so that's a good tailwind for that particular line. We're going to see new home construction rise by about 17% this year, although that's going to be heavily tilted toward multifamily dwellings. So that bodes well for personal lines insurers offering rental policies, and we're seeing some traction there. So there are opportunities on the commercial line side, some opportunities on the personal line side, but all in all, they're modest. The industry's growing at about a 4.5% pace right now.
Watch for more of our coverage of the Joint Industry Forum right here on RIN TV.